Hey, good evening, good evening, good evening. Hey, Cicely, Jamar, how
Hi.
you doing?
Hello, good evening. Hope you're both doing well today.
Yeah, it's been an interesting day, but it's been a good day. Not gonna complain. How'd you guys' day been?
It's been good.
Good,
A
good,
lot of activity.
good, good. I'm glad to hear that. So we are on here today because we want to talk to share some information about the new Biden rule that came into effect May 1st, 2023, concerning the redistribution of for credit scores. So anyone with the credit score under 680 would be in this particular plan. They would be uh, eligible for the lower interest rate. Is that correct, Jamar?
They'll be eligible for a lower cost to
Okay.
get the same rate
Okay.
compared to where they were prior to May 1.
Okay. Prior to me, and what about anyone who was over 680?
Anyone over 680, unfortunately, they're going to be penalized slightly, and the cost for them to get the same loan is going to be slightly higher.
Okay.
The actual cost to get the rate is more because there's new loan level price adjustments. That's what the Biden administration or rule, what it did is it took away loan level price adjustments for people with credit under 680, and it actually increased the loan level price adjustments with people with better credit who are above 680. The thought is because the cost of getting that loan is now going to be more affordable, that same rate, now it's going to open up the doors for more people to be able to get financing. You still got to have down payment. You still have to, have substantial or decent credit. It's just going to be a little cheaper for you out of pocket, even if you decide to buy your rate down, which you may do that to help qualify. It's going to be cheaper for you or less expensive for you to buy the rate down now.
Okay. So in essence, it just kind of in in a I guess a unpolitical term, it flip flop. Those who usually
That
have okay. And Cicely, we were talking about this, and Cicely was sharing with me that she's getting a lot of questions pertaining to the post that she shared about the rule. I think Cicely's frozen up. Is you free? Okay. Cicely, tell us about some of the questions that you were getting so that we can answer some of these questions for anyone who is interested in learning more about this particular redistribution rule from the Biden administration.
Well, when I posted on yesterday, I don't think it was like a question. A lot of people really don't know what the rule is itself. So that's pretty much why we're on live today, so we can pretty much break down everything and what it applies to. And it's better to get a good perspective from a loan officer who really that knows the back end of it because they're the ones that pretty much deal with the loans.
Okay. So in this, there's some questions that I got. Actually, some people were kind of upset.
Yeah, somewhere upset, somewhere upset as well, as regards to they have to pay a little more. Um, if the people who got good credit, they have to pay more. But I mean, it's just $20 more. But I mean, I see why, but I don't really think it'll affect them at all, to be honest with you.
Okay. So Jamal, for instance, if you can give us a an idea about someone, and I want to just do like a comparison with someone who was getting a loan. And I know we don't have any documents to show today, because this was, we wanted to make sure that we got the information out as quickly as possible to make sure that people were informed. So I wanted to just ask you and put you on the spot, okay?
okay, sounds
Okay.
good.
If you can give us a comparison or ideal so that people can get a better understanding. So if someone applied for a loan and they were approved for $300,000, right? And they
Okay,
had a 640,
okay,
and then someone who applied for a loan at, with that same criteria, $300,000, and they had a 700. What would be the difference?
Okay. So now the way the rule is, if someone were to have that 640, for example, and they're looking at, say putting down 5 to 10%, that person is now going to get about a 5/8 credit towards their closing costs. So 5/8, 0.625%.
Okay.
So that
Let me stop you right quick. So would they have gotten that if they were at a 700 before?
before they would not have gotten this
Okay.
5/8 or 0.625% benefit to their closing costs.
Okay.
And that's kind of what this rule did. It flipped everything over and it made people with better credit, now they're on the end where people who had not as good credit were at before May 1. So in your example, at the $300,000 loan amount, the person that's with the 640 score, they're going to have about an $1,875 credit towards their closing costs. Meaning, hey, your closing costs may cost $3,000. You're getting this $1,800 credit to offset that $3,000. So now you're only having to come out of pocket with close to $1,200 now versus $3,000 before.
Okay.
Now in the same instance, the person that has the 740, 750, 780 score, now that person is getting penalized, and they're going to get that same rate. We're talking about the same rate. We're going to say 6.75%.
Mm-hmm.
They would now have to pay $1,125 to get that rate. So it's pretty much a 1% swing, a 1% difference between the 740 and above, or should I say even 680 and above versus 679 and lower. And that's the premise, or that's the idea of it. It's like, hey, well, you can afford this now because you're not having to pay the $1,125 that you would have had to pay before to get that same rate. Now you're going to get the rate and you're going to get an $1,800 credit. So it really just revolves around or works with the closing costs. Yes, you can buy your rate down if you want to. It's going to be cheaper for the person with the lower credit score to buy the rate down compared to somebody with a better credit performance, which wasn't the case prior to May 1.
Okay. So it makes it more affordable for them.
Yes.
Okay. Okay. Some of the things that I said, because I did a little research on this myself, and one of the things that stood out to me is that it said that the rule doesn't change the process of underwriting and going through the guidelines. So none of that changed. And this particular rule is for mortgage only, correct?
That is correct. And it doesn't change the underwriting criteria. They're still going to be looking at work history. They're still looking at debt to income ratios. They're still making sure that you have substantial down payment. None of that part has changed. The only thing that's really impacting the client or the customer is their out-of-pocket expenses or the cost to get the rate.
Okay. So we might go in the weeds a little because I want to ask you this question, okay?
Okay.
So it says on here, so I'm reading from an interview from one of the spokespersons from the federal housing, okay? And they said the new policy is not a rule. It's their what she was saying was that this is only going to affect if you have a second mortgage or if you are trying to refinance your home, is what I was reading while they were doing the interviews, what they were saying. That's for the people who have the 680 and above. So is it going to affect them? Say if they're going to go purchase a home, right?
Okay.
They're buying it for the first time. Because what I understand the rule means is that if you are refinancing your home or if you are trying to get the equity out of your home, that this is not going to affect. Yeah, that's the only way that this will affect you. But it won't affect you if you're purchasing a home and you have a 700 credit score for the first time. I'm trying to just make sure if that is correct.
No, if you're buying a home and you fit that credit criteria, and
Okay.
you're buying a home after May 1,
Okay.
and you're locking in your interest rate after May 1, then these new loan level price adjustments, or LLPA as we call it in the financing world, these loan level price adjustments are impacting you as a buyer.
Okay.
Moving
It's
forward
across
now,
the
you're
board.
going to get
Across.
yes,
Okay.
it's
Okay.
across the board, correct?
Is there an expiration to this new rule?
No, I mean, kind of with anything, if the government sees it's not working, they may take it away, or if we get enough complaints, people go and complain. People with good credit
Mhm.
go complain to their, senators and things like that, who have powers to go back to Congress and try to overturn these bills. Then it can change. But as of right now, there is no expiration date set in stone. But as rates or the economy continues to be in this uncertain state, I can see people complaining because, again, why should I be penalized and pay $1,125 more because I managed my credit a little better than someone who didn't? They can say the haves and have-nots, which I get it, but having good credit doesn't mean you have a lot of money. It just means you paid your bills on time, or you
Right.
had more than one credit line. Doesn't mean you make $200,000 a year, because I've seen people who make $50,000 a year have better credit than somebody who makes
To
one
have
hundred and
good
fifty
credit.
thousand dollars a year.
Right.
So it's just
Right.
about managing your credit.
So I asked
So
one of the things I want to ask Cicely, because Cicely is our resident credit repair specialist, certified credit repair specialist, and she always she works with a lot of people pertaining to the credit. And one of the things that we were talking about is that because this rule applies to mortgage only, that doesn't affect any other aspect of your credit. You know, from refining. I mean, from getting a personal loan or purchasing a home. It doesn't that this particular rule only applies to mortgages. And so one of the things that you were saying, Jamar, I know some people who are, doctors or attorneys, and they may not have good credit, and some of that unfortunately is due to student loans, and they can't get a loan, but they do have they make the income. So
Hmm.
one of the things that me and my coach were talking about, Dwayne Dwyer, he was like, that's probably, something we can consider, and why maybe this rule um, could benefit those people who are lost in the middle. And I've worked with a lot of people who have the resources monthly. They manage their money. It's just that their debt to income ratio is upside down. And a lot of that is due to, for instance, the
Student
big
loans.
elephant in the room, student loans.
student loans, yeah,
So, Jamar, I wanted to ask you a question about student loans. So, with I know it was 1% at one time of the total amount of student loans. Has it changed to 0.5? I think has that changed?
it's 0.5 for FHA and for a Freddie Mac, assuming that on the credit report there isn't a monthly payment that's showing up.
Okay.
If your monthly payment only shows your balance because you're in some sort of forbearance or hardship, then we have to use the 1% rule if you're doing a conventional loan. Um, yeah, conventional, that's it. But
Not VA.
FHA,
The VA doesn't fall under that guideline.
correct. VA doesn't fall under that guideline.
Okay.
VA, if I'm not mistaken, I believe it's 5%. I'll have to confirm.
Okay.
I'm not 100% sure with VA.
Okay. No, and I just
You did catch me off guard.
yeah, and I just asked the question because I have so many people come to me about I want to get a house, but my student just yesterday, but my student loans, are just astronomical amount, and I can't afford it, or I can't get a proof of credit because of my student loans, and they're in deferment. So if they're in deferment, are they still going to use a 1% rule?
Yes,
Okay.
yes. And actually, and I take this just to correct for the VA,
Uh-huh.
it's 5%. It's 5% of the outstanding balance divided by 12 months.
Okay.
or
Oh,
divided by
okay.
12.
Okay. So
So
yeah.
yes, if there's nothing on there from the credit report, but just has the balance and no payment amount, then
Mhm.
we have to calculate it based on 5% divided by 12.
Okay. And
Mm,
I'm asking these questions, and I'm not veering away from the topic that we're talking about. Um, but I'm asking the questions because I want to make sure that everyone's listening who may have these questions that we can answer them, because this rule does benefit a lot of people who were at one time priced out of the market, and now
yep.
they have an opportunity to purchase a home. So that's the
Hmm.
benefit of this. There's one thing that I thought about when I was researching this and doing some reading on it. I thought about, that anyone who we're going to be helping purchasing homes under this particular rule, we want to make sure that they're still credit wise. We want to make sure that when you're purchasing a home, it's a whole different ballpark from renting. So we want to make sure that we equip them at Keys to Key Realty. We want to make sure that we equip anyone who we're going to be helping purchase a home to be have some financial literacy. And that phrase may seem intimidating, but it's not. It's really something that we can work with you until you can get the hang of it, and we have resources that we can refer you to as well. But when you get in a home and you purchase it with us, we want to make sure that you stay in your home, and if you can begin
Right.
to build your legacy for your family and for your children. Now I'm gonna stop talking. Okay, so here's a question: how does the rule benefit the housing market? Who wants to take a stab at this question?
Sure. I think it opens the pool of applicants because people with lower credit before were probably a little intimidated, timid, don't want to hear no, think they can't qualify for the homes. Like, well, I got the money, but I don't have the credit. Well, you know, this now might put you in a position where you can now get the home, even though you didn't have the credit, or you may still don't have like the 680, 700s. You still can possibly qualify for the home. And one thing I did want to throw out there, Lisa, is for the borrowers who have credit scores, let's just say you're at 780. If you're at a 780 credit score, this don't affect you. Like you're not impacted. So
Okay.
really kind of like 770, not so 680 to
Mm-hmm.
779
Mm-hmm.
middle FICO score who is who are the individuals being penalized per se. And I don't like using that word penalized, but you're going to pay a little bit more than your counterparts with the 679 or lower.
Okay. I wanted to delve into this question here that Dwayne Dwyer asks. I think you answered the first part of it, but he said, it appears that those who have proven to manage their debt effectively will be penalized. And we talked about that. And and we can only guess why, because we don't know why they made the rule. But we can only, give some input or opinion about why it appears that way. So we don't know what the mindset, of the administration, because they have not really shared that. And how it's going to, it may, and it does appear that way because so many people have said the same thing to me. But the other part of this is there not a concern that this incentive is serving the conditions for default loans as previously experienced? And I actually listened to someone answer this same question today, because I was, still going through and doing some research on the loan, and hearing what people were saying about it. So it, as in 2008, when we had the market crash, there were the subprime lot, and Jamal, you can speak to this. Subprime lending was an issue, a big issue, and now we have so many checks and balances that I don't believe that it would cause a issue in the market now as it did in 2008 because of this particular rule. I mean, the guidelines have changed. They're still going to have to go through underwriting. They're still going to have to meet the criteria. So that all of that is still in place. So that does not just go out the window.
Correct. And those programs, even though we had to go through that painful lesson in 2008,
Mm-hmm.
those programs are still around. They just have different names.
Okay.
And,
Yeah.
we call them non-QM loans or non-qualified mortgage. They're
Okay.
still there. You're going to pay more for the rate,
Okay.
but those programs are they're still around, unfortunately. I say unfortunately, it helps some individuals. I mean, again, depending on the situation, but they're there for the right person. Business professional, when you're working a job, or you make a lot of deposits. You might do a lot of buying and selling on Amazon or eBay, things like that, and you can show, hey, look at my deposits coming in. I make significant money. I just don't have the actual history to show it's been occurring for 2+ years. So okay, somebody will take a chance with that person. If you're getting $20,000 of deposits in your account every month, you're doing something. You're doing something to keep cash flow going. Somebody's going to take a risk
Right.
with you as a borrower and give you a loan. You're just going to pay a
Hi.
much higher rate.
Okay. Okay. And that's good to know because some people may fit in that category. I don't
Yeah.
know if there are people you can serve, but and I know we didn't do this initially when we started, we just jumped right in. But if you guys can just tell us a little bit about yourselves. Cicely, can you please tell us a little bit about you? You do so much. Oh my goodness, you do so much.
I know. Hey, you guys. So I've been in real estate since 2016. This year will be 7 years for me. Um, and I truly enjoy what I do because um, overall, I'm doing it to help others, family members, pretty much get them into a home and just to see the expression on their faces. And I just love what I do. Um, it's just the excitement. I love encouraging people because when people go through the process, they feel like they're alone. And when they're working with us, with Keys to Key, we don't want them to feel alone. We want to encourage them, make them feel like they got this, which they do. And we just push them to the max. So when we get to that closing table, all we see is smiling faces.
Yeah.
And I love it. And Jamar is my go-to guy because he's very knowledgeable in the field. And I love Jamar. I love how he explains the process. And a lot of people that I sent him as clientele, they come back and tell me good, positive things, and they understand the whole entire process from start to finish. And I love it.
That's beautiful. Thank you, Sissy, so much. Sissy does so much more. Can you please tell us a little bit about what you do with credit as well?
Yeah, so right
And
now I was doing credit repair.
Mhm.
I stopped the process of doing credit repair, and now I only offer credit consultations.
Okay.
So the credit consultations, I just charge a $50 fee. What
Mhm.
we'll do is talk over everything over the phone. It's like an online presentation that we do over the phone,
Mhm.
and we go over your credit together. And it's been helpful for a lot of people because a lot of people don't understand credit
Mhm.
and they don't understand the credit report itself. So what I do is go down and break down every account on their credit report, and they pretty much go from there. Have good credit.
Well, that's great. See, this is the kind of person that you need with you from start to finish. It does not matter what your issue is. We can get you approved and we can teach you along the way because that is a
Yep.
part of our job in this particular marketplace. We want to be able to teach you. And we have a great team with Jamar. I worked with Jamar before as well. And I'm so thankful that we can go to him and call him and ask him questions and get on his nerves. and and he will respond. And one thing that I really do admire about Jamar's work ethic is because he allows he wants to make sure that we have business as well. So
Right. Right.
to make sure that we're working together. And a lot of times, unfortunately, lenders don't. they don't do that. They don't look out for the agents. They just like, well, you got any clients? You have any clients? You have any clients? Jamar does not do that, and
Right.
he cares about the people. One of the young ladies that we worked with together, we started, and I think he said he talked to her maybe a year after she kept calling calling him. So that's the kind of help you get when you work with people who care. So it's
Right.
not just
Right.
about, I hear so many things people say, that's why I don't like realtors. They're unethical. Well, that's not we have a heart to serve our community, and we want to make sure that you're taken care of. And the reason why the name of this company is Keys to Key, because we enjoy seeing your smile and handing you keys to your home and opening doors for you. That's so we enjoy that. So
That's
I
beautiful.
I would like Jamar just to, go ahead and
Man,
share about.
well, thank you both. Yeah, thank you both for just the kind words, and I can definitely reciprocate the courtesy back because it's not something that's being made up. Work with you both. You both are great at what you do, and your clients. When you have a client, that's your client for life. They're not calling anybody else. They don't want to talk to anybody else as far as another realtor. And I love that a they feel loyal to you because you show them loyalty first. And so you lead by example. And I think that's really big because again, a lot of realtors, if they say, hey, go get pre-approved, they talk to me. I let you know, hey, look, this person has a whatever the score is. This person got a 490. They're not ready to buy right now. You don't just stop the conversation with that client. I don't either. But we both come up with a plan. We
Yep.
put it in writing. Everybody's included on that 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 action plan,
Accountability.
and we hold that borrower accountable. Hey,
That's
you
right.
say you want a house, here it is. Here's what you got to do. If you do these things, we're going to follow back up with you in 30 days or whatever the case may be. So again, working with you two that has definitely been a pleasure and a joy. Myself, I started in the industry in 2002 as a processor with Washington Mutual, and from there, I kind of just stayed in the operation side for about six, seven, no, about 7 years. Underwriting, post closing, and the underwriting aspect gave me a good idea on how to help people. A lot of times, just me being a loan officer now, a lot of underwriters who I've worked with in the past, if the deal doesn't work, they'll say, hey, this doesn't work, it doesn't pass, this loan is suspended, or this loan is denied. A lot of underwriters don't give you alternatives or give you suggestions on how to switch the deal or how you can make the deal work by doing a few action steps like we put together for our clients. And so having that underwriting background really gives me a different eye when I speak to a borrower or when I'm looking at credit or when I'm trying to make a deal work. And so I've been in the loan officer or sales capacity since 2011. So going on 12 years now in sales, and I enjoy what I do because it's allowed me and my family a lot of opportunities to do things we wouldn't have been able to do at this pace. I think, of course, I would have been able to buy a house. I would have been able to, take trips, but maybe not as frequent or not as early as I have been. Outside of originating, I also do a lot of I do land investing, wholesale activities, and I do a lot of stuff with like tax liens and property flips. I flip more than a handful of houses. So again, I just love real estate and opportunity it provides, and I know that again, the clients hearing these stories can be your story. You just have to have it in your mind. You're gonna listen to someone. The one thing I do notice about, and I'm gonna say this again about the two of you, you tell your client something, they mute all the outside noise. Whether it's like, oh well, my lender told me they can get me approved with this $5,000 of non-medical collections on my credit. How come your lender can't do it? When you tell your client, hey, look, There's a different scenario, a different story for different folks. Don't listen to what your friend did.
Yes.
If
That's
you
a big,
follow the steps that Jamar's giving you,
that is a big issue.
we're going to make sure you're right. We're going to get you to that finish line.
Mhm.
So, I mean, that's about me. And not to over talk, I just want to throw one thing out there. A lot of people that I've read who are upset about the rule change and how it can negatively impact them because they have good credit. And people are like, well, I'll just miss a couple payments and get my credit score and drop it. And then I can get the better pricing. Here's what I'm going to say to you. If you want to drop your credit score and you're in that, if you're in that, let's call it 700 or even 680 and above, if you're in that range, don't miss any payments.
Don't.
What you want to do, if you're going to do anything, is just charge up your credit card. If you're below 30%, you can charge your card up. That higher utilization will bring your score down, but it's something that can be fixed in the eye of, or in a flash of an eye, because all you got to do is make that payment up back down 30% or lower, and your credit score is back to where it was before. So do not miss a payment.
Do
Do not be like, oh, I'm not paying these bills because I want to buy a house and I want to get a better out of pocket cost. No, just take one card that you have that's under 30% and just
slightly above. Don't
slightly, yeah, correct, slightly above.
don't
Or if you charge it up, you make sure you have the money to pay it down. If we say,
right.
yeah, pay it down like the next day or the day after, if need be.
I'm glad you addressed that, because we don't want anyone to think or have that mindset. Because I think that for me, if I had to pay a little bit more, I'm going to be okay with it. I'm sorry, I'm a Christian, so if I mention God, that's forgive me, but I'm not ashamed of that. But if God has blessed me to be able to do more, then I will, because He's going to give me far more. But don't ruin your credit because of this rule, trying to play chess with the Biden administration. Okay. I did want to also say, before we close, I wanted to say that I am so thankful to Cicely and to Jamar. I'm thankful to have a team who cares about people and who really wants to, and who's happy for them. People don't know how much you. There's a phrase that my coach would always say to me, and I can't think of it right now. But people don't care how much you. People don't know how much you care until they. I'll give it to you. Put it in the chat for me right quick. But it's one of the things that he says all the time. People want to know that you care, and when they know that you care, they want to work with you. They want to work with you. And for anyone who thinks that I can't possibly purchase a home, you have people in this particular group, in this partnership, who's going to make sure that you purchase a home and make sure that you're accountable. If you say you want a home, we can guarantee you that you will have one. Now, that's a guarantee I can make. And they tell us to never make guarantees in this industry. But I can guarantee you that even if you don't get your home in 1 month, 2 months, 3 months, if you stay the course, if it takes you a year, even if it takes you 2 years, we will get it done. So people don't care how much you know until they know how much you care. So for me, that's great, because people know that we care. We care about them, and we want to see them be successful, and we want to see them fulfill some dreams that they have for their family. So this is one of the benefits, I think, about the Biden rule that I am thankful for. I do want to tell you a little bit about myself as well. And Jamar, I wanted to ask you one other question I forgot to ask you. What states do you work in? What states are you licensed in?
Currently, I'm licensed in North and South Carolina only because the fact that I haven't gone back and did my renewal for Georgia, Virginia, Florida. But I will actually be doing that between now and the end of this month.
Okay. So if you guys have any looking to purchase a home and you want to reach out to Jamar, we'll make sure that we make his information available for in the when we get ready to we're going to do some editing and make sure you have this information. Okay. I am Lisa Keys, and I am the principal broker here at Keys to Key Realty in out of Columbia, South Carolina. I'm also licensed with another company in Georgia until I can open my brokerage there. But I am licensed with Location Realty, a great company. I like them, but I love my company, Keys to Key Realty. And Cicely right now is and I'm also licensed in North Carolina, but I'm not with the firm there yet either. But I am fully licensed. I am a broker in North Carolina and a broker in Georgia and a broker in charge here in South Carolina. And Cicely and I work here. Cicely works in Georgia as well, so she can help you in Georgia if you're interested in purchasing in Georgia. She's done goes back Florence area. She's in Florence as well. I've done some things in Sumter, South Carolina. So if you need us in any of these areas, we are here to help you. And
Yeah.
we want to encourage you that if you want to purchase a home, if you want to become a homeowner, we are here to help. If you have any questions or anything that we can answer for you that you may be uncertain about, you're going to have my information. You can find me. I always tell people, Google me. You'll find me. But no, I will make my information available for you. My name is Lisa Keys. I am the principal broker of Keys to Key Realty. I also want to thank my coach Dwayne Dwyer. He jumped in and helped me get everything set up the last minute. So I want to thank him so much for helping me. And even though he has another obligation, he stopped me. I really do truly appreciate that. Because I know I was over here. What to do? He talking about I got it. You just talk. You just do what you do. So I appreciate him doing that. And Jamal or Cicely, if you have any final words before we close,
Nope.
nothing.
Call us.
Call us. Okay.
Call us.
And of course, we're gonna make some information available for you. If you can contact us, you can find us on all social media platforms: Twitter, um, um, Instagram. I know you can find Cicely on Instagram as well. What's your handle on Instagram, Cicely?
CC the realtor.
CCCECE, the realtor on Instagram. Facebook is
Walker.
CC Walker. You can find Keys to Key Realty. You can find Lisa Keys. I'm on Twitter. I'm on Facebook. I'm on Instagram. I'm on LinkedIn. You can find us on all those social media platforms. Jamar?
My Instagram handle is hitjup, HITJUP,
Okay.
and my Facebook, Jamar Matthews, JAMARR. It's at the bottom. Matthews with two T's and an S.
Okay.
I'm pretty easy to find. You can Google me.
Yeah.
Type in loan officer.
Thank you guys so much for allowing us to come in and give us some time to share some information with you. And again, if you have any questions, please reach out to us and we'll be glad to answer any questions you may have. Share this information. And again, reach out to us. We're here. Thank you guys so much.